Kate, do you have another speaker for me?
Yes, we've got Erik Gebhard in the room.
Erik, can you hear me?
I certainly can, and I can hear you too, Kate. I am here.
Wow, crystal clear signal coming from Los Angeles. Where are you broadcasting from today, Erik?
Yeah, I'm in Orange County, just
Orange
just
County.
right here by Laguna Beach, Laguna Niguel.
Lovely Laguna Beach. I remember it well. So why don't you go ahead and get your PowerPoint up and I'll give your introduction. Upon graduation from the University of Southern California with a BS in Business Administration, Mr. Gebhard acquired his Series 6 and 63 securities licenses and worked as an account executive with a mutual fund and insurance group. He then turned his efforts to the futures markets, earning a Series 3 commodity futures license with an option specialty firm. He subsequently worked at two other futures brokerage firms before co-founding Altavest in 1997. After several years, Altavest developed a large client base of options traders. The Altavest team saw a need to make complex option spreads simple. They then developed the Theta Trader, which pre-selects complex multi-leg options trades on stock indexes and automatically manages risk and reward. The Theta Trader technology allowed for the creation of unique six-leg option spread structure called the Dragonfly. Theta Trader also utilizes an integrated trade alert functionality wherein to respond to an alert, the client only needs to touch accept or reject on their smart device. Mr. Gebhard also worked to make automated futures trading systems available to Altavest clients via a user-friendly platform called AV Systems. The purely algorithmic driven systems on the AV Systems platform, as well as unique option strategies, offer non-correlated investment opportunities. So I see your PowerPoint up here, Erik.
Great.
You have until 5 minutes before the hour when we give away more of our $100,000 in prizes. I'm going to go ahead and mute myself, and you have the floor.
Great, thank you very much. And I'm going to go through a lot of material. And if I go quickly through some of the slides, don't worry, folks. These are just real quick visuals, and all we need to look at maybe is a headline, and then we're going to get into the demo. So we're going to look at automated options trading, something you probably have not seen before. These are algo-driven option spreads. We use automation for risk and profit management. We have strategies that can be used for directional and non-directional circumstances. And then there's a functionality with our one-touch trade alerts, a very unique service, and you'll want to make sure to see that. And with that said, again, thanks to Mad Hedge for having me. This is a great event. I've heard some of the presentations, very knowledgeable group of presenters. And before we jump in, let's remember we are speculating. We try to make money. That's what we're trying to do here, folks. We want to profit from our trading, but of course there is always risk whenever there is reward. So do take a moment and read the risk disclosure. It is important. I'll give you just a brief moment to look at that. I think the most important element here is that all the funds committed should be risk capital, and past performance is no guarantee of future results. So a lot of us are looking to trade individual stocks, and that's fine. I don't want to discourage you from doing that. There's certainly a place for trading stocks, but we are doing something a little bit different. And this is just sort of a chart probably familiar with all of us. It could be any market, any time, any place, any time frame. This is what you call CHOP. But we're looking at stock index options. So we have a proprietary automated approach to doing that. So we want to avoid the dilemma this guy here is having, or gal, let's say, either way, trading and struggling with their orders. You want to use automation and technology to help you along the way. A little bit about Altavest, and then we'll dig in here. Since 1997, that's yours truly there in the middle. I don't have my camera turned on. I don't know what the protocol is today, but I am here. I'm not a ghost, so we are live. And these are some of our floor brokers down there trading the S&P 500 options in the trading pits. So we've been doing this for many, many years. decades of experience. We're registered with the CFTC, members of the NFA, and we're headquartered here in California. Those are the regulatory agencies that oversee us and our industry. And we've traded millions and millions and millions of contracts over the years. Maybe you've seen us in some of these periodicals, Market Watch. Here we are quoted just a few weeks back. They reach out for quotes and so forth. But really, you want to try to avoid being the loner in the basement. Use industry veterans and those with experience to help you along the way. I think that's what we're going to help you do here. Something with decades of experience and development behind it. And we're going to show you that here in just a second. A little bit about myself. I'm Erik Gebhard. Been doing this about over 30 years now. I'm a co-founder of Altavest. Altavest, of course, since 1997. I began in 1991 with my Series 3 license. I have a BS in Business Administration from the University of Southern California, so from USC and the Trojans. Maybe you've seen some of our webinars over the last couple of years, in particular since the pandemic started. Some of the various presentations we've done, and of course, Mad Hedge as well. And I got started in the securities industry out of graduation in mutual funds and annuities. I have my Series 6 and 63 securities licenses. And of course, now with the Series 3 futures license, and also I have my Series 65, which is the investment advisor license as well. So we're going to jump into what is all pretty much self-evident to all of us. We're not going to dig into a whole bunch of charts, but November, just what is that, 3 months ago, we had highs in the market. Pretty much all the markets that we follow, that you follow, I'm sure, the stock indices, you know, crypto, Bitcoin. This is as of yesterday, down 20% in the NASDAQ, 12% S&P, Russell 14, Bitcoin about 19. Of course, we had a big rally late yesterday, another one today. We'll see what happens after the Fed does what they do today. But so what about a further economic slowdown? What's in the cards? You had a spike in energy prices. Inflation, of course, is still near record in terms of at least a rate of change. Rate hikes on the way. How about this? Oil price gains precede recessions. There have been 12 recessions since 1946, 8 followed by major oil price shocks. 3 occurred immediately following a modest or notable oil price run up. So is that a correlation causation thing? Well, we'll look at that a little bit further. U.S. Producer prices soared at double digits for the first time. So definitely inflationary. U.S. inflation rate, 40-year high, 7.9%. Here's the graph here. The only time it was higher was back in the 70s, you know, during basically the oil embargo with OPEC and so forth. So inflation, CPI, PPI likely to stay elevated. That'll keep pressure on the Fed to raise rates into what is an economic slowdown. Look at the yield curve. We're not going to go into this, but the 10-2-year yield curve, if you're not familiar with that, of course, you can search that. But the point is, as it declines and gets closer to zero and maybe gets inverted, that is quite a, let's just say a reliable indicator for an upcoming recession. So we're right on the precipice here. Goldman slashes their 2022 GDP forecast to 1.75%. They see a 35% odds of a recession. University of Michigan inflation expectations ramping up even further. Again, the only time it was higher was back in the 70s and 80s. How about this one? Consumer sentiment plunges as inflation expectations surge. I'm sure we can all relate to that. We're seeing it in food and gas, housing, you name it. So here's what that looks like here in terms of sentiment down here on the lows here. Russian oil output about to fall 30% according to the IEA. They say there's a supply shock coming. No surprise there. This is a great piece from the oilprice.com. The Fed may be well forced to raise rates while going into a recession. So they're basically suggesting these higher oil prices, of course, are going to presage the recession. Of course, we've collapsed in the last couple of days with oil, but that's not the sign of a real healthy market when you rally tremendously and then collapse like that. I don't think the volatility is over with there. But what happens if the Fed does hike? Economic growth has decelerated, and the Fed, of course, looks like it's going to hike rates. and stock market volatility is likely to expand and remain elevated. So the Fed funds futures are discounting here almost 7 rate hikes by the end of this year. And so what happens if they do? Well, looking back, the Fed seems to always be early and always be late. And so economic growth is beginning to slow, and Powell is now in a position to repeat the mistake he made in Q4 of 2018. And the S&P's total return was negative 4% during that time period. So here's what happens. The Fed is too easy monetarily, then they drive up energy prices, then the Fed begins to tighten their policy, and then the last 10 times that's caused a recession. So of course, history doesn't always repeat, but I think that's a track record to be aware of, folks. The Atlanta Fed cuts Q1 GDP to 0%. Of course, you know what's happening in Ukraine with Russia. A lot of terrible things happening there. This gentleman here calls it the war cycle. He's suggesting 15,000 on the Dow to a bottom of around 5,000. So I don't know if he's right, but certainly a lot of negative sentiment. So how do you trade in all of this? And is it true that only 1% of day traders are profitable? Well, maybe, maybe not, but we're going to look at these 3 barriers to trading, and I want to know if you all relate to these. You can certainly, as we get towards the end, we can do some Q&A, but which ones do you relate to the most? I think I've kind of boiled it down. We can all relate to day trading is not easy, no matter how you cut it. And is there a less than 1% success rate? Well, there's an article here by an economist called The Day Trading Pandemic. And Charles Schwab studied their most active accounts over a 6-year period of time. And those active traders would substantially underperform a simple low-cost index fund. Trading the most generated the worst returns. Here's a study out of Taiwan over a 15-year period. Less than 1% of day traders consistently beat the market, and 80% lost money. And then here's another one here out of Brazil. Only 3% of the day traders made money. So something to think about. And meanwhile, I know we're getting bombarded, social media, this piece here from the Wall Street Journal. Basically, if you want to be popular on social media and you're talking about trading, you never criticize a meme stock, which would suggest you're bullish. You have people like this giving you advice. This guy found a glitch in the market. This kid here says just double $5,000 8 times and you'll have $1 million. So the math is right, but I don't know, is it that easy? So that's called narrative trading on a story, and that's something you want to avoid. Needless to say, I think that's probably self-evident. But even if you are trading on your own, and I don't want to discourage you from day trading. I'm just trying to suggest that you're going to need a process, something that can be repeatable, something that has some discipline assigned to it, so on and so forth. And then even if you're doing all that, are you actually beating the market? And it looks like here, this is kind of an interesting thing here, where this another economist, Mark Skousen, he runs a simulation here where you've got these monkey portfolios, and 96 of the 100 monkey portfolios beat the generic cap-weighted index, outperforming the benchmark index by an average of 1.7% per year. So a little bit of humor here, a little bit of levity to lighten the load. I don't want to rain on everyone's parade. So these are just some of the statistics and data that I found when it comes to day trading. And of course, a lot of the people day trading are probably doing it for the first time as well. So maybe that's not a real fair assessment. But number 3, emotions. We all have emotions, of course, but how do we control our emotions when we're trading? Ed Sequoia here says it can be expensive trying to convince the markets that you are correct. And that is not what I want people to remember me by. So we don't want to have to say this over and over. You want to, basically follow the market as best you can and not argue with it. So there's a lot of noise, though, to overcome. You've got pundits that are bearish and bullish and, media, you name it. There's a lot to follow. It kind of puts us on this roller coaster ride of emotions as you're trading. You're optimistic and euphoric as you're making money. You're crushing it. You're killing it. Then the market's moving against you. You raise that white flag of surrender. You capitulate, and then you're optimistic again. And that whole cycle repeats itself. Motley Fool says there are 3 common biases, and we become our own worst financial enemy. And there's a confirmation, an anchoring, and a recency bias. Definitely this little meme here, picture, I think summarizes it quite well. I think we've all kind of felt like this at some point. And remember, algos, they have no emotion and they're dominating the landscape. What percentage of trading is algorithmic? JP Morgan estimates 90% of US equity trading volume is machine-driven, HFT, algo-driven, call it what you want, but it's not basically just people like us, using our mouse to place trades. That's not really where the volume comes from, at least consistently. Bloomberg says robots are outwitting humans on their investment picks. Well, that's no surprise there. So that's what we call revolutionary trading. We're definitely in this era right now, and you want to avoid being this person hunched over at the screen and babysitting and screen watching all the time. Here's how trading used to look, folks, not too many years ago. Short video I took. So all the floor brokers, traders, trading desks, clerks, you name it. Very efficient, very effective, but here's what we're dealing with now. Automation, built-in risk controls, non-emotional. So how can you use these algo-driven options in your portfolio to trade markets that are moving up, down, and sideways? That's what we're going to look at. So remember, we're trading futures index options, not individual stock options. And there are some benefits, and the reason why is because, first of all, an index is always less volatile. Number two, there's a strategy for any direction with an index. Because they're less volatile, you can do a lot of non-directional strategies as well. You can use strategies for hedging your portfolio or simply being directional and speculative. And then if you're trading an index or two, you're following just one or two markets. You don't have to track 6,000 or 7,000 securities, ETFs, and whatnot. So looking at insurance companies real quickly, we all know how they make money. You pay the premium and they basically insure against risk. And they just use math. They use probabilities, statistics. That's all they're looking at. They're crunching numbers and they figure this is how much you have to pay us, even though we know we're going to pay out at times. Just like a casino. They play, you play roulette enough times, you're going to lose $5.26 on average per spin. And you're going to keep playing, and the house wants you to keep playing, because even though once in a while you hit that green zero and you get paid out, overall, you're going to lose. And how do I know that? Look at this. Nevada casinos report a 9th straight month of $1 billion in house winnings, which is a record. So that's the math working for them. So how can you be the house when trading options? We're going to look at some high probability option strategies where you collect premium, be consistent and patient with the process. And you have to manage that risk, expecting to have losers. And you want to manage reward. That's just as important. You need the proper tools to make this all happen. We have non-directional, bullish, and bearish strategies. So we're going to jump into that here. We're going to look at credit spreads. These are all insured positions. Then that means they're predetermined with risk and reward. And they may be non-directional. And don't worry about this chart. I'll explain it here. But here's a stock index moving along, a little bit of an upward bias. Here's the upper boundary of a trade, and here's the lower boundary of a trade, and that's called a wide margin of error. If the market stays in this wide margin here, then a trade like this should be profitable. We're going to look at something like that. But before we do, let's look at a couple of the Greeks. We're not going to take a super deep dive into the weeds, but delta, you should understand what that means. It's the approximate probability of expiring in the money, and that's how we view it. And for example, if it's 0.25, that means there's a 25% chance that option expires in the money, but the opposite or converse of that is there's a 75% chance it expires worthless. So that's how we have to look at delta when we're trading options. And remember, delta is always moving. This example here will always be moving up and down as prices move, and of course, as time moves. And it's not the probability of a winning trade. So don't make the mistake of thinking that. And then there's theta. It's just remember options are a wasting asset. They have limited lifespan. So theta is a negative number, it refers to time decay, 1 day of time decay. So if an option's at 10 points right here, and theta is negative 0.05, the next day the premium is 9.95, and the next day after that, 9.90, and it keeps dropping as time is approaching time zero here. So there's the value of that premium just dropping and dropping and dropping. Now here's an example of a call spread. You have the market trading here, and you decide to sell this out of the money call spread. So the red line is the option you sell, and you collect 4.5 points. The blue line you simultaneously buy, and you pay 2.25 points. But the net result is you collect $112.50 in this example minus your commissions, and you're looking for the market to stay basically below this threshold. And the same with selling a put spread, just the opposite. The market's trading right here, and then you decide to sell this out of the money put spread, and you collect 3 points for selling the red line. You pay a point, you buy that blue line. The net result, you collect $100 minus your commission. So just that simple. Remember, these are not naked positions. You don't want to be without your coverage, so to speak. No naked little rats and cats here. So everything is covered. Your maximum risk is capped, and a couple big advantages. You don't have any margin calls if you're doing covered option spreads. And of course, there's no unlimited risk. So you don't have to worry about that. And here's a condor. It's called an iron condor spread. And we look at it in this example when you sell the spread, and it's simply a put spread and call spread done together simultaneously. And that's all it looks like. You sell an out of the money call spread, collect the money, sell an out of the money put spread, and collect the money. And you hope that the market here stays within this range, generally speaking. And then here's this, I guess some would call it a weird strategy. This is our proprietary strategy. We'll reveal that to you right now, and we'll jump into the demo. It's a short option strategy called the Dragonfly. It has 6 legs. It's for income generation, and it's just a variation on the condor. And this is what it looks like. And let me break down the structure for you. You sell 4 of these calls. You buy 3 further out of the money and 1 closer to the money. And the same structure on the bottom side with the puts, sell 4 puts, buy 3 further out of the money, and then 1 closer to the money. And in this example, we'll point out that the 4 options, the puts that you sell here, are 50 points lower than the one that you buy here. And the same with the calls. This 4 that you sell, those are 50 points higher, further out of the money compared to the one that you buy. And that changes the whole dynamic of this trade. And I'm going to show you in just a second. And then we have a couple of unique strategies for bear markets. You can do half a dragonfly. So you can do just the call side only, collect premium by selling the call side of the dragonfly. And something we call a bear hedge. Probably better just to visualize it. Very simple again, sell an out of the money call spread, and then you use that money that you've collected to buy an out of the money put spread. And we'll look at that in the demo here. But here's the question. How do you even know where to begin? Which market are you trading? What strategy to apply? At what price? What strikes are you choosing? What's your expiration? How do you manage the risk? How do you manage the profit? So that's called Theta Trader. That's your answer. Pre-built option spreads. Our algo will generate what we call theta trades every day with advanced strategy automation, bull, bear, and flat market conditions. So automated risk and profit tracking. We're going to jump into that here. Simple, effective option spreads and risk management. And if I can switch my screen here without any glitches, let's see if I can. I think we're in luck. I think I did it, folks. Okay, you're looking now at my dashboard. Just to double check, yep. And this is our Theta Trader dashboard. And these are the theta trades up here in this top section. We'll walk you through that in a minute. These are open, sold, or short positions or spreads. And these are any open bought or long positions here. And then this is all of your account information pulled directly from your Altavest trading account. So Theta Trader is fully integrated with your Altavest trading account, and then your current market prices here. So you'll notice there are bullish strategies that are pre-built, bearish, and non-directional. And then we're trading on the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So these are the markets that we're focused on. And we've looked at the non-directional or neutral strategies. And just want to point out too that this is just a demo account that I use for webinars like this. So I wouldn't make too much of the results one way or another. And I'll explain what these colors mean here in just a second. Well, right now, I guess you could say color or color, just the green. But this is what it looks like. If you want to look at an iron condor, this is how you do it. You just click the button here and everything is pre-populated. 16 days till expiration, up to 66 days till expiration. And again, the algorithm has chosen all this for us. It's all pre-selected here with the strike prices. This is your maximum profit potential at expiration, and then your targeted annualized return at expiration. I should point out that you cannot expect a 308% return if you place that trade. This is only here to compare one condor to another. That's why it is there. So just keep that in mind. I like to just pick the one with the most days till expiration for these demos. Let's drill down and take a look. Okay, so you can see here a table is pre-built for us. We're looking at this May week 3, 35.10, 47.90 condor. Let's look at a chart here. So here's the market, and here's the call spread you're selling and the put spread that you're selling. Gives you some perspective. And here's the settlement value, the premium that you would be collecting, your put risk, your call risk, the commission, available capital in the account, cash required, profit potential at expiration, targeted return on cash, and then your targeted annualized return. Let me point out something here. The 35.10 put is being sold and has a delta of 9.96. So that has an over 90% probability that this put option is going to expire out of the money. And the 47.90 call here, you're selling that to 6.87 delta and over 93% probability that this option you're selling is going to expire out of the money. And you'll notice here that it pre-populates to a sell because you're selling the condor, and default is always 1. But if you change the quantity here to 2 or 3 or maybe 4, you see the cash required moving up like it would. We'll leave the pricing alone and go ahead and place that trade. And there, it assumes you're filled in this demo account, just that simple. And now let me show you, this is a really, really incredible feature. You can back test and go backwards in time. It's our time machine. And I'm going to show you that in just a second. And before I do, I want to run through one dragonfly. This is our proprietary strategy here. So we're going to look at this May week 3 dragonfly. Again, this is on the ES or E-mini S&P 500. Okay, folks, and here's the chart. This is what it looks like. Here's the top end, the calls, and the puts on the dragonfly. And again, you see the cash required compared to the condor is a bit higher, maybe 4 or 5 times higher. And that's because you're selling 4 options and 4 puts and 4 calls. So it's always in the increments of 4. So if you wanted to do 2 dragonflies, then you'll see, you'll notice that, of course, that would be 8 puts and calls that you're selling and so forth. And the cash required would move up as well. So it moves up accordingly. And you'll notice the targeted return on cash is usually a little bit less compared to a condor. And that's simply because of the structure of the trade. Remember, you pay money to buy this call here and this put here, and that's like buying extra insurance, so to speak. And we'll go ahead and sell 2 of these at that price, trying to collect 10 3/4. And that's it, just that simple. And I'll show you how this gets tracked and so forth. But I want to point out this section up here. Give it just a second to go back to the dashboard. you'll notice there's a trade simulator. It's available right here. And I saved some time and I've preloaded some trade simulations. There we go. So here's an iron condor in the month August. And you'll use these buttons down here to go forward in time or backwards in time. So you can go backwards or press the play button and then pause it at any time. And you'll see day by day, you'll see it started with 57 days till expiration, and every day goes by here. And you'll see the P&L on the trade is still negative a little bit, and that's because theta decay hasn't worked enough yet, hasn't matured enough. You'll see this here is green, the RTI, that's our proprietary indicator, the risk thermal indicator, and it says to do nothing. Okay, you see the trades turning green or profitable, theta decay is starting to work. And then it turns blue, and blue means take profits. And I want to point out that you can automate this. So whenever it turns blue to take profits, Theta Trader is scanning and monitoring your account. It'll automatically place the trade for you. And I'll show you how to do that. But remember that date, August 20, with 12 days till expiration. Now here's a dragonfly. So instead of a condor, you did a dragonfly in that same day. And let's see what happens. August 4th, with 28 days till expiration, you had a profit-taking signal. So compare that to August 20th. So you had to wait an additional over 2 weeks in the condor before the trade matured enough. It gave a profit-taking signal. But remember, the structure of the dragonfly is different. So it can oftentimes mature more quickly, allowing you to get out of a trade and into a new one more quickly. So I just want to point out some of the differences in the condor and the dragonfly. And here's another condor trade. And look at this, turning yellow, slightly elevated risk, but still do nothing. And you can see why. It's getting closer to that upper boundary there. Then it turns orange, even more elevated risk, but still do nothing. The computer algo says not to do anything yet. So it's going back and forth between yellow, green, orange. And then finally ends up being a profitable position. But let me show you on the dragonfly. Look at this. With 38 days remaining on the trade, it gave you a profit-taking signal. So the dragonfly matured, and this is an April into month expiration, just like the condor. So the same day you could have placed either the dragonfly or the condor. Of course, the dragonfly matured much more quickly, gave you an opportunity here and even up here to close that position out. Now let's look at the bear hedge. I'm going to go back and show you that. We talked about it briefly. Remember, you can do non-directional strategies, but also directional. You can use these strategies here to hedge your portfolio, of course, or if you want to be purely bullish and speculative, that's fine too. Something called the bear hedge we looked at. We'll just look at this April end of month bear hedge. So you can see we're selling this out of the money call spread, use that money to buy an out of the money put spread. We'll do 2 of these. We'll get those at a credit actually. So oftentimes you do a bear hedge like this and you get paid to do it, or you can do it for even money. Doesn't cost you anything to place the trade. And so you can see it right there, the puts and the calls that you bought and sold. Just that simple. So let me jump back. Here's a bear hedge simulation. I don't even quite remember what this, well, here, let me do this. I want to be able to see this bottom table. So you can see the trade is turning profitable, gets a little negative here, but really you want this trade to work out in a way that the only way it can really work out is if the market drops quickly enough with enough magnitude. So you can see it's bouncing around, but sure enough, you get this blue profit taking signal here to take your profits and run on that bear hedge. And here's how you do it, folks. You go up to your account here, you go to the settings, you click Activate Risk Manager, activate Profit Directive, and that's how you can automate this. And then you save those settings. So it's just that simple. The RTI will get you out of a trade before expiration. If it turns red for too much risk, take your loss, or it takes blue, take your profit and move on. So there's also in all of your settings here. Sorry, I meant to go here, the help file. You'll go under glossary. You'll see a description of all the color coding on the RTI. We won't go into all that right now. You'll see we have video tutorials here available. That's all part of Theta Trader. Just wanted to point that out. We have our daily research. This is all proprietary and only for Theta Trader clients. So we look at, and candlesticks, speaking of that. So great presentation on candlesticks. We always look at candlesticks by default, just so you know. And so we look at technicals, help us guide our decisions moving forward. And then of course, we're looking at our daily trading narrative here. You can see here what's happening in Europe and Asia, US, looking ahead, technical points, and an economic calendar. That's all proprietary and only available to our Theta Trader clients. And let me jump back here. And you can notice, of course, that, or I can just go back here on the dashboard, you can see at a glance all your open positions that are sold, all your bought positions here as well. You can go back and look on one page if you want to see everything all together. And look at all these positions here, they're all green. So those are all working out well, which makes sense because they are higher probability trades. So, you know, more often than not, you're going to have winning positions with those types of trades, of course, depending on the market environment. But so you can see everything at a page, one page here. You can see the bought position is orange, which makes sense. That's a lower probability outcome. But if you want to see the history on any position, you just go ahead and click it. And it's pulling up all the data. So I've highlighted this one here in gray, has 3 days till expiration. So this is what it looks like. This was when the trade was first placed, the calls and the puts. And you can see here, going back in time, it turned yellow for a little bit. Here was a little more yellow, a little orange, a little more elevated risk. But you know, if you don't have an algorithm or some sort of guidance or a process, you're going to go nuts trying to figure out when the best time to exit would be. I mean, you're going to be looking at these numbers here. You're negative, you're positive, you're negative. Oh no, I'm getting more negative. What do I do? What do I do? I'm going to get out. You know, you probably would have closed out your position here, taken a loss unnecessarily, because now it looks like it's going to mature and be able to get closed out for a nice gain. So anyway, that's the whole point of Theta Trader. Now, I want to jump in and show you the very best feature of all. There's a whole page on closed positions, but we're not going to go into that. Here's the best feature of all. If you bear with me just for 1 second. How can we make this easier? Well, believe it or not, it does get easier. Our trade alerts, we call them 1-minute trade alerts. In fact, it's probably more like 10 seconds. These are one-touch responsive alerts. You simply touch, accept, or reject on your smart device. That's all you have to do. So that's because these alerts are live, meaning they're integrated with your Altavest trading account. All you do is touch accept and your order is placed. Here's an example. You'll receive a text message and that will be a link. Oh, excuse me here. And that link will take you to the trade alert page. So you see a graph You'll see the account, the premium collected, the cash required. The quantity is already pre-selected for your account. Gives you your metrics here, your targeted annualized return, and then you touch accept. And that's all you have to do. All right, folks, I've got limited time and we're going to get to the end here. So I want to make sure to show you how to get involved, and then we'll have some time maybe for some Q&A, but I think I'm going to be able to answer a lot of that as we go. We have a Theta Trader membership. It includes everything in the Theta Trader software. So you saw how the software creates those theta trades for you with our algorithm, uses the RTI functionality to automate everything. You simply check the risk manager, the profit directive. You can use that trade simulator, go backwards in time, and very fun tool to use and very valuable. So you have the theta trades, the RTI, and the trade simulator with our Theta Trader software valued at over $3,500. Then you have those one-touch trade alerts. And this is a huge deal. People absolutely love it and they lean on it and they can't live without it. Remember, these are all integrated with your account, so you don't have to log into some other firm and try to copy an alert from an email or text or whatever. That can be a bit of a mess. The software is valued over $4,400. So Theta Trader, including the alerts, is valued at over $8,000. That's our retail. And then remember here, here's the real key. We have a private coach available for you, and really a licensed broker. You can do 1-hour screen sharing sessions or 20-minute or whatever fits your schedule. But you have a coach, someone to work alongside with you, a licensed professional with experience, decades of experience, review your trades, project, look forward, give you guidance, valued over $7,500. I think that's undervalued. So you have Theta Trader software and the alerts and the coach, a value of over $15,500. And there's still more. It's a little bit of a cheesy thing to use here, but it's kind of fun to use out like the infomercials. But wait, there's more. Don't forget our proprietary research, valued over $2,900 with our trade scope. Our online tutorials, of course, that's just included in the software. So you have Theta Trader, the trade alerts, the private coach, and the research valued at over $18,500. And this is our membership price here, our retail price when we do presentations in person. But we're not going to use that price. We're not even going to use this price. So it's going to get even better, folks. 80% off retail. I like doing these live events, and this is a great event here at Mad Hedge. So we've cut our price as low as we go, and it's one payment only for $597. And that's a lifetime membership. So I want to stress one-time payment. It's not quarterly, yearly, monthly. And here is the link. You want to write that down, cf.altavest.com/mad. And that's my direct line. That's my phone number, Erik, 949-236-6961. So take a screenshot of that page if you want. And here's really the best thing of all. There's no excuse, folks. If you're just a little bit on the fence, you know what? You can sign up, take advantage of the offer. And if it doesn't work for you in the next 30 days, just let us know. No one's holding your feet to the fire. No one's twisting your arm. You just rebate you the money, and that's it. Now, a few FAQs. Are futures and options tax efficient? Yes, they are. And you can lower your tax rate by 10%. So if you're trading individual stocks, I won't go through all the numbers, you're going to have a $7,400 tax liability in this example, 12.6% return. But if you're trading with us, that same example of winning 20% return, you have a tax savings of over $2,000. That's because of the tax efficiency of trading futures. That's a huge, huge, enormous advantage. I can't stress the advantage there. And there's no more itemizing either. So keep that in mind. You just get your P&L for your 1099 IRA accounts. Yes, we do IRAs. Contact us for some details if you have any comments or questions on that. Even Forbes says investing in alternative assets with a self-directed IRA is something to look at. Why the E-minis? Well, they're liquid, they're efficient, they're cost effective, and the minis are huge, folks. The E-mini S&P 500, it outtrades all ETFs around the world by over 2.5 times. Okay, bet you didn't know that. And even with the SPY, 10 times bigger than the SPY, average daily dollar volume. 5 more advantages for these E-minis: volume, liquidity, and access. You get superior execution, a cost savings of $4 to $15 per contract compared to the SPX options. That means you have those tight bid offer spreads. And the E-mini, these spreads are one object when you trade on the E-minis. So like a Dragonfly within ThetaTrader, that's as one order at one price, one net price. So if you do a Dragonfly with stocks, good luck. I mean, not to sound smug, but I've tried, I've watched people try. You can't do it. You cannot do it as one order. You have to break up the order into 2 separate legs and components. And then how do you know where to get in? How do you know where to get out? How do you manage it? It's a real nightmare. So you have a large market share. You have all the strike prices you need and expirations when the ES family. So for example, here's calls and puts on a condor, and then some time goes by, and then there's more calls and more puts. Some time goes by, and you have another layer or tranche of strikes. And those strikes are available in the E-minis because that's what the volume and liquidity and depth is all about. And remember too, you're only tracking just a couple markets in ThetaTrader. You have efficient margin versus stocks. You have a clear cost structure. There's nothing hidden from you. Remember, these are E-mini futures options. They trade at the Globex exchange at the CME group. So every order is treated the same. No payment for order flow, such as some, you hear of Robinhood and so forth. And, that's fine, but it's not free. You get inferior trade prices costing customers $34 million. SEC fined them $65 million for, misleading customers. So it's called payment for order flow. It's really disguised commissions. So David Einhorn says, if you want the broker to work for you, pay a commission, and you don't want to end up saving a penny to lose a nickel. So that doesn't mean not to trade stocks. We all do. It just means it's not free. It's just kind of a bit of false advertising, in my humble opinion. And like this guy here says at Barron's, nothing of value is truly ever free. So that leads us to the question, what is the commission rate? Our E-mini rates are 5 1/4 round turn, all in. That includes everything, both sides, round turn. And you're going to think, gee, that sounds like a lot. Well, here, just a couple months ago, here's a copy paste from a big box brokerage firm. And here's their rate, 2 1/4 for futures options. You say, wow, that's a lot cheaper, Eric. Well, no, it's not. That's per side, and they don't include their exchange and clearing fees, and it ends up being higher than what we charge. So our rates are very competitive. What is ThetaTrader's performance? Well, everyone has a self-directed account. Everyone makes their own trading decisions. So every decision is made by the trader, the client, and everyone's different. And I want to remind everyone too that the figures in ThetaTrader, the percentages and dollar figures, everything is net of all trading cost. So everything is net, all performance is net. What size account? We suggest 25,000 to 50,000 as a minimum. Of course, we have 6-figure accounts, 7-figure accounts. It just depends on your situation. We have IRA, like I mentioned, individual, joint, corporate, trust, you name it, all the usual cast of characters there. And, to kind of bring it back to near the close here, why would we even consider alternatives? Well, they have performance that might have a low correlation to traditional investments, and that can improve diversification and lower portfolio risk. So looking at ThetaTrader as a non-correlated alternative, why would you even do something like that? Well, here's an example, the CRB index. If you have your money in cash, you're losing money just by having it in cash. Inflation is, I guess you could say, picking our pocket. So you need to look at some different approaches to really putting your money to work for you. And how about this? What are the next 10-year stock market returns looking like? There's a piece here in Market Watch. The next 10 years don't look so good. Americans have a high allocation to equities, and that is a contrarian indicator. So just having a lot of money invest, well, basically, if it's already in the market, who's left to invest kind of thing. But here's a statistic known as the R-squared. And since 1951, it has predicted 70% of the changes in the stock market's 10-year return. And what is it saying now? It's projecting the S&P produces a total real return of minus 4.2% annualized in the next decade. So we shall see. And also unrealistic expectations. This is one look at the yellow here. The average US retail investor expects a 17.5% forward return. In December of 1999, they expected a 19% annualized return. And what happened in the next 10 years? It was a negative 2.3% compounded annualized growth return. So here's what investors are expecting, and even advisors suggest they're off by, they're way off by a factor of maybe 3x. So low correlation equals alternatives. That's why we like what we do a lot. And remember too, you want to try to avoid those market drawdowns. This is kind of stating the obvious, and I know it's self-evident, but maybe it helps to review every now and then. I'll show you this graph here in just a second. This is the last 30 years. So this is the red part here is a negative return or bear market. And you can see this red part here, bear market, so 2000, 2008. So it says 4.5 years were spent in those two bear markets, but investors spent 10 years of that period recovering from those losses. So it took 6 years to recover after the tech crash and 5 years after the financial crisis. So just keep this in mind, folks. If you end up sitting on a drawdown of 40%, you have to generate a 67% return just to get back to break even. Or worse yet, this is pretty simple math. If you drop 50%, you have to generate a 100% return just to get back to where you were. So you want to try to avoid those drawdowns. You don't want to sit on drawdowns. You want to make sure you have the tools and strategies and approaches that don't rely on just a market moving up all the time. So really, what does your portfolio look like? Is it all stocks and bonds? And we all know that's really not diversified. Or do you want some alternatives in there? So we think we could be a part of that alternative slice of your pie there. And so just remember to wrap it up with our Theta Trader membership for the Mad Hedge event. There are strategies for all market conditions. These are pre-selected spread trades. Our algorithm builds those out for you, pushes them out to you, and then you can automatically exit those markets and those positions with the RTI. You can set that up for automated risk and profit controls. And then people absolutely love those one-touch trade alerts. And then to wrap it all together, you got the personal coaching if you want to talk to anyone. We're not just chat bots. So really, it's simple. You would complete the order form. And then number 2 here, Theta Trader login, you get your email, and then you open your Altavest account and begin trading. So it's really that simple, and that's my direct phone number. And it looks like I probably have a few questions here along the way. Take a look. Someone's asking the size of account. We suggest 25,000. And that's really primarily because of the nature of the trades. You see the Dragonfly takes about $5,000 in margin just to have one Dragonfly in place. So that's really the reason why you don't want to just put in the bare minimum. And let me go scroll up here. It looks like we have a few more questions. Okay, I'm going back here. Does the setup offer directional bias when taking trades? I'm not sure I understand that, but if you want to look at just bullish trades, you can, or just bearish trades, or of course, just non-directional, and that tends to have a neutral outlook. There might be a skew depending on the valuation to one side or the other, but you can really build the trade out any way you want it. All right. Oh yeah, here's a good comment, and I want to reiterate this. Oh, someone says I use Theta Trader. It's the real deal. Thank you for that. So Theta Trader is web-based. Okay, so and it's our product for our brokerage firm. So Altavest, we are a brokerage firm since 1997. I'm a co-founder of Altavest, and we built this technology for our clients to use. So using Theta Trader, you have an account with Altavest, if that makes sense. And the trade alerts are just delivered to you via text message with a mobile phone number. So it works on any, pad or tablet or Android or iPhone. It doesn't matter. And yes, you can do IRA accounts, absolutely. Contact us for any details on that. So I have a couple more minutes here, so let's see here. And yeah, unfortunately, we can't work with Canadian accounts unless you have a valid US residence and address. I wish we could. Most of the trades, you're just going to exit according to the RTI. We don't really think rolling over trades is a great idea. You just end up taking a losing trade and hanging on to it. And we are the brokerage firm. And all you need is a cell phone number, a mobile number, and email. We can send the trade alerts to both, a mobile number or an email. And if you want a little more indoctrination on options, just use our video tutorials within ThetaTrader. And you can do this in the UK. Most of the EU, we can't, but if you're in the UK or Australia, we have lots of clients overseas there. And yes, ThetaTrader is all web-based. And we're only trading futures options, primarily on the E-minis, the NASDAQ 100, Russell, and the E-mini S&P 500. And occasionally we do something in gold and crude oil in the last couple of months, but that's kind of more of the exception than the rule. And of course, we can trade futures as well. We're a full service brokerage firm, but this is our options platform, our specific technology for options. And of course, US members, you're welcome. We can't work with Canadians, but we can work with some countries out of Europe and Australia. And I mentioned the UK. Just let us know exactly where you are. And we're only trading futures options. We're not trading stocks or individual stocks. I want to clarify that. And of course, we can trade grain markets, futures markets, corn, soybeans, wheat. We can do all those. But ThetaTrader is only designed specifically for the markets that we looked at today. All right, I think, am I out of time here, Kate?
Just about. This is John Thomas. Thank you very much for making this presentation. And just to remind everyone, the link to Erik's presentation is in the chat box on the right. See, I saw it a minute ago. It just flew away. It's cf.altavest.com/mad. And that'll take you to the dedicated sales page with Erik's offer. So Erik, thanks again for presenting today. Go Trojans.
Right on, right on.
And we shall see how the year plays out.
Absolutely. Hopefully we've got strategies to work in any environment. That's the whole idea. And regardless of where the markets are headed. So that's kind of why we like using ThetaTrader, and we're not kind of bound to any one particular strategy.
All right, great.